say they are near the process of bottoming out. If you look at the monthly chart, then they had given a multi-year breakout and decade breakout. It is retesting that breakout area. So 25,000, 26,000 is going to be a key level to watch out for. If that is survived, that is sustained, then we can see a very strong upside coming in. So I would not say the stocks are bottoming out right away, but probably a small dip in Nifty IT index, and it can make it more lucrative in terms of IT, in terms of technicals, where the 55 moving average is also placed. But I would still give it some more time. If you look at the IT stocks on a smaller time frame, then yes, they are in the oversold zone. If you look at 120 minutes chart, and even if you look at 240 minutes chart, we are seeing some divergences coming in terms of RSI as well as MACD. I would wait for a bullish crossover to be seen in MACD crossover for me to get a confirmation. Once that happens, we can expect a 4-5% bounce sort of coming in IT stocks. As we discussed that being in oversold zone, we cannot rule out a technical bounce back. But then again, having a technical bounce back is one thing. Having a follow-up buying is another. So in my case, in my opinion, one should keep IT on radar for a short-term trading perspective. Names like Tech Mahindra, names like Coforge, or maybe stocks like KPIT, which are seeing some traction, can play for technical bounce back sort of. But if you want to play for a longer term horizon, I think we should still wait for some signs, some confirmation before entering. On a longer horizon, IT will remain my top pick for sectoral play for 2 3 years. But even for that to happen, I would still wait for some confirmations to come into the picture. And once I have the confirmation, I would play for major upside. The IT index has been in a major uptrend for in last 20 years. The index has been forming higher tops, higher bottoms, which is a characteristic of an uptrend. So in that perspective, it can cross the previous swing high of 39,000, 40,000. But for that to happen, the journey has to start. It has to show some signs of accumulation, show some signs of reversal. It will start with smaller time frames like daily chart, and then gradually shift towards weekly and monthly chart. So for let us wait for that to happen, and then we can start building positions for a longer term perspective. I would not play for a contrarian basis. But if you're looking for a contrarian bet for next couple of weeks, then yes, one can play. The downside looks, I would say, limited. But for short-term basis, I would wait for a bullish crossover on 240 minutes chart, or at least in 120 minutes chart, a bullish crossover in MACD. That will make sure that the previous swing low, the current swing lows that it had made, that will sustain, and we can see a good trading bounce coming in IT names.
The world is passing through a significant amount of transition and a change into a new world of technology. On one side, I think we have till now used IT largely for the purpose of, I think, efficiency. Now the world is basically driving IT for the purpose of necessity. So from a point of view of, I think, transitioning from efficiency to necessity, I would rather like to believe that I think IT as a whole, as a subject, is likely to, I think, gain significantly higher amount of prominence. Today, I think we have already started moving in the direction of, I think, connecting our various activities on IoT. We have started using artificial intelligence to generate, I think, the consumer demand. We have started using the Industry 4 as a subject, I think, to connect the enterprises on the blockchains. We have started using, I think, the processes called machine learning, digital learning, and metaverse. So all in all put together, if you look at it, I think the IT, the way in which I think is transitioning from efficiency to the growth, I would rather like to believe that in coming period, the demand scenario is going to remain extremely buoyant and extremely strong. The bandwidth, telecommunication bandwidth, is basically, I think, driving the larger amount of growth as well. The 5G and the availability of broadband is basically making sure that I think most of the activities would be real time. The classic example is autonomous cars. Classic example is connected cars. Now we are going to be soon seeing the connected industries. We are going to be soon seeing the connected supply chain logistics. We're going to be soon seeing, I think, the connected activities, which one has experienced in different other spheres across, I think, globe in different businesses. So I think the demand scenario cannot be doubted as far as IT is concerned. In fact, I think I would like to believe that I think those companies which are using IT as capital expenditure item will soon move into, I think, the IT as a revenue expended item. It is going to be part and parcel of your operations. So this is again, I think, making a very strong case for companies which are providing the IT and IT related services.
IT sector plays a very crucial role in India's success story. So I would like to highlight few important developments which is happening in the sector and why we are bullish on this in this sector. IT sector contributes around 8% to India's GDP. Interestingly, IT sector not only brings a big chunk of India's corporate forex, but it also accounts for very little forex expenses. Around 43% of India's corporate foreign exchange revenue comes to IT companies. In fact, government has paid special focus on IT sector with a vision called Digital India. Government believes India's service exports can reach to 1 lakh crore US dollars by 2030. Also importantly, technology weightage in Nifty 50 index is high. So this sector is of very high weightage to the country and to the sector, to the index. Are IT stocks bottomed out? Is this question generally investors ask. Given ongoing geopolitical concerns, risk of recession in developed countries, rising interest rates, etc., Nifty IT index has corrected by almost 30% from its top. We believe valuations have improved a lot and a lot of concerns have already priced in. My personal belief is that when you pay light, you pay right. Valuations have come down quite a bit from the multiples 12 months back. Now there is a sea change. From something like a 35 times price to earning multiple for large cap companies, it has come down to 22 to 25 times. Is it too early to play contrarian? I don't think so. I believe this is a good time to gradually add large cap IT stocks to your core portfolio. When I'm saying core portfolio, I mean you add to your long-term portfolio. We are getting quality management, debt-free companies, cash-rich companies, strong businesses at attractive valuation. In fact, our topics among from a longer-term perspective is Infosys and HCL Tech. Infosys is well positioned to capitalize on digital journey of clients. We suggest investors to focus more on large cap companies. The world is moving to digital and hence IT sector cannot be ignored. Generally, contra bets in quality companies have paid well in the past. So I guess the same will continue in future too. People do ask, are IT stocks in oversold zone? Yes, as I already mentioned, the stocks have fallen down drastically, so they are in oversold zone. But we need to focus at what valuation and what earnings growth trajectory these companies have. The return ratios are very healthy for most of the IT companies. So this is a strong candidate to add to your portfolios.